Hi everyone, I hope you're all doing well, and today I'm going to be looking into my UK stock market portfolio, August 2020, and I'm going to see how all my stocks are doing. Now, for some background on this kind of portfolio, a lot of you guys, a lot of my UK viewers, because I used to be just US stock based, a lot of you guys said, can I start up a UK portfolio, see how I do, how I manage all them positions, and I thought I'd give it a go. So this portfolio has been running for about 3 months now, so we'll take a look at how everything's doing. But I think this is a really good series to look into because like my US stock portfolio has been running now for quite a few years. So when you look into that portfolio, it's got gains of 200%, 250% in there. Some are up 100% at the moment. So there's a lot of big massive gains in there. But to actually see how I manage a portfolio from scratch that's 3 months in, that's got a lot of volatility in there with the market going down. I've got some positions that are down a bit, some positions that are up a bit, how I'm averaging to them positions. It's a really good portfolio to learn from and how I start off from scratch when investing into the stock market. So for a lot of you new guys, you'll be able to pick a few tips up with this portfolio that I'm managing. But as always, I still believe that if you don't have any US companies, I would definitely look at having a US portfolio as well. There's just a lot of growth there to miss out on. So I would definitely look at getting a US portfolio if you don't have one as well. UK portfolios are good at the moment because we've got a lot of deals out there, but in the long term there's a lot of growth in that US market, so I would say that managing both a US and a UK portfolio is something definitely to look into. But what we'll do now, guys, is we'll take a look into my UK portfolio. And remember to smash that like button, guys, and we've already hit 2 home runs in this portfolio. So we had Boohoo, which we bought into. We sold out at 85% gain, and obviously we bought back into the company since all the Leicester factory situation that has gone on. We sold that for an 85% profit, which is nearly 100% return off in 3 months, which is fantastic. And then we got Barclays as well. We made 50% gain on that one. We sold that one basically just because the bank sector jumped up way too much for my liking. And just in general, there's a big bounce off them COVID lows, and obviously the stocks are starting to come down now because of the COVID second wave. So them sales do look pretty good. So we did get 2 kind of home runs off early, which is really good. So this is my UK portfolio off Trading 212, and we'll go through all the companies and how they're all doing and where I'm at with all these companies in general. So we've got, starting on the top, we've got 888 Casino. So that's up 29%, which is doing absolutely fantastic. One of the good runners straight off, and I think I'm just happy with that just to run now and see where it goes. Hopefully we'll be selling that one out at 100% gain within the next 2 years, so that's doing really well. Airtel Africa, I said when I bought this, there's a chance that it goes down. We're down nearly 20% on this one. It's just because it was so near 52-week highs, and at some point I might average into that one. We've got Aviva, which is up 10%, and Aviva is just doing really well. I don't know if I'll get 100% gain on this one. It might be one of those that sell about 50% gain, but just one to leave there plodding away in the background. Bright Developments is kind of flat, 0.5%, and like I say, long term that'll be totally fine. And then we've got the addition of Boohoo, and you can see that I did buy Boohoo quite heavy. The reason why I bought quite heavy, by the way, we're up about 7.65% on Boohoo right now as making this video, which is currently at 7 AM on the 3rd of August. But Boohoo makes up a big chunk. Even though I think that this company has potential to go up 100, 200% in the next 5 years. The reason I bought so much is just because of how great of a company it is at such cheaper valuations. I thought this was extremely cheap. So some of this I won't hold for 100% gain. Some of it I'll hold for about a 30% gain, and then maybe a little bit more after that. And then the rest I will hold for a long term. I just thought it was too easy money to miss out on. So that's why it makes up so much. You can see it overtook the Greg's position. But like I say, I will be trimming that one a lot earlier compared to the rest of them that are on the portfolio. And we've got Card Factory, which is down 20%, which had a great earnings because of its online sales. And like I say, the only worry with Card Factory is its balance sheet, but apart from that, its online sales looks like it's going to do fantastic over the next few years. We've got Cineworld, which is down 30%, which is one of my spec stocks. And like I say, I still don't rate this as a buy. If you look at this portfolio and what you think of Cineworld, like I'm just playing this as a spec stock. It's either going to go bankrupt or it's either going to go up for 300%, 400%. And that's how I see it. We've got Dark Group, which at one time was up like 35% and it's now down 6%. Obviously, it's had a lot of trouble with the bans on the holidays and the Spain ban. But like I say, 2020 is a write-off. But when we look at 2021, that's a company that sees they're going to do 100% return, in my opinion. EasyJet, one of my new positions. And like I say, once again, 2020 will write off, 2021 will come back strong. Greg's, another company that was up not so long ago until this second wave fear came in. Down 20% right now, and it's just one I'm happy to average in. Obviously, when Boohoo's position gets trimmed, that'll start coming towards my largest position, even though it's the second largest right now. And then we've got Hollywood Bowl. I think, obviously that was doing okay, and then we had the potential that it was to shut down when it was supposed to be opening. Obviously, we're going to have to wait 2 weeks for that one, but once again, a great company at too cheap prices. That's an easy 100% return on that one as well. JD Sports, 12%. Doing quite well. Obviously, it'll have the gyms reopening as well. Good little growth company in there. Legal and General up 2%. We've got Rightmove, which is up 2%, which I'm actually thinking about maybe extending that position slightly, so we'll see what happens there. We've got MJ Gleason that's down 10%, another house builder. We've got Taylor Wimpey that's down 13%, another house builder, but we'll come back strong as soon as them sales start coming back in next earnings report. WH Smith, which is down 19%, obviously that's going to be down until the airports open back up and then it gets the traffic again. So that, it's a write-off year for WH Smith, but we'll come back strong in 2020. Just look how good it was in 2019. And then we've got Whitbread, which is down 7%, which is totally fine. I don't know if I'll buy any more of that one, and we'll see how that one manages to do. So guys, that's my updated UK stock market portfolio. I hope you found that useful for you guys that want to know my position sizes on everything and what percentage I'm up and down on every position, because I know a lot of you guys track my UK portfolio. So I hope you found that useful, guys. If you want to know what stocks I'm buying, when I'm buying them, guys, make sure you join through the Patreon in the link in the description below. As always, guys, I'll see you on the next video.